TheoTRADE, this is Don Kaufman. It's January 31st, 2024. Just minutes to go to the cash close here on this Wednesday afternoon. The SPOO's getting rocked to the downside, of course, following tech earnings, some of the fallout there. Jerome Powell hit the main stage today, some sell-side activity. Look, it's got us asking the question here. Did the Fed just pop the market's bubble? Look, let's get right down to business here on this evening's video. As I said, just moments left in the trading session and volatility really starting to emerge. One of the first things that I want to point out, look, we could talk till we're blue in the face about, oh, it's Google. Oh, Microsoft, some sell-side activity. Look, you need to push past that. I recognize that Meta's coming out tomorrow and Amazon and Apple. Okay, wow, that is a threesome for an earnings announcement. Push past it. There is a major change in this marketplace, and it's what I want to bring to you first and foremost. So one of the first things that really stands out to me on the screen, it's the bonds are bid. The bonds are bid. And what I'm talking about over here is simply the bonds, okay? Now, the bonds being bid, you're like, okay, that makes sense, right? Bonds are bid, and that takes interest rates where? Oh, no, that takes interest rates down. The bonds are bid. Look at the size of the trade right here. It's huge by huge. And again, I can't stress this enough. The bonds are bid with the marketplace down. Lately, we've actually seen a conversation piece where, well, the bonds were rallying, the market was rallying, dogs and cats living together. The point that I am going to make is a very simple one, and it's been a very long time since we've seen this. The bond market at this point looks incredibly defensive, meaning that we're bailing out of S&Ps, we're bailing out of tech like it's going out of style. Look at the financials. The financials, and again, mind you, the financials, they had rallied this morning substantially. Out of the gate, they were bursting to the upside. They're getting annihilated by the tune of about 1%. Now, granted, yeah, the S&Ps are down 1.5%, but the reversal in the financials in most major sectors across the board, here's your advanced decline line, we're seeing greater degrees of correlation. But again, the disconcerting area, why, are we buying bonds right now? It's duck and cover, plain and simple. This has nothing to do about interest rates. Money right now, it's running scared. And that's something that, look, you can look at this marketplace and we could talk about, the Fed, as I said, till we're blue in the face, and most people are going to miss what's right in front of you. And that is bonds are bid, and it's a defensive bid. And you're like, well, how do you know that? Well, the volume alone screams that. Moreover, look at the volume inside of the S&Ps. We're going to double yesterday's volume. And please, it does absolutely matter, because it basically is a sign like, panic at the disco right now in this marketplace. Now, before you're freaking out, I want you to look at the SPX. There's the closing bell. I want you to look at the SPX with me. And the reason I want to go into the SPX is before we get ahead of ourselves, right? Before we start completely, I'm starting to freak out here a little bit. We haven't even hit the lower edge of the expected move in the SPX for the week. Now, I normally kind of reserve the, talking about the SPX, the expected moves. Typically I would talk about it on a Wednesday evening, and then of course, obviously on a Friday night going into the weekend. But this is critically important, and not for the reasons that you're thinking. It's critically important to be looking at the SPX because you've been in a marketplace, right, that has, well, let me go back to the S&Ps for a second. Okay, you've been in a marketplace that's basically straight up from 4,100. Yeah, there was a 3-day bout of volatility at the beginning of the year. But we've traded 4,100 straight shot to 49.57. Granted, there's a contract roll in here, yada, yada, yada. No question about it, though. It's basically 800 points straight up. You are a volatility-starved animal. I don't care what you think of that terminology. You're a volatility-starved animal at this point. What that basically means, okay, is, there's people that are going to go out there, or they're going to want to sell premium. Don't do it. Don't you do it. We're not even home yet for the week. The week, and again, this is why I'm bringing it up and why I think it's so imperative that people understand. You got to sit back. You got to relax. Hey, whatever it takes. Duct tape your hands. Sit on them. I don't care. The expected move this week is plus or minus about 70 SPX handles. At 70 points, right? 70 points. Have we hit 70 points? By the way, 70 points to the downside here, be 48.20. Okay, we just came off yesterday at 49.31. Unquestionably, it is a precipitous drop to the downside. But when you haven't even hit the expected move, okay, for the week, you got to sit tight. And I'm going to tell you something right now. I would not at all be surprised, okay, because the SPX is over, it's done with, it's closed, right? So the SPX stops moving, obviously, when the bell goes off, but those S&P futures keep rocking. I would not be surprised, okay, if the S&P futures continue to sell off in the after hours, taking us right to the lower edge of the expected move. So you open up in the morning, maybe in the lower edge of the expected move. Again, everything that you're doing right now, stop thinking about the past. Don't be living in the past, okay? Do not worry about, well, Microsoft, okay? That's great. Could be a key reversal over there. As I said, maybe the Fed just did pop the market's bubble, right? And we know, like, it's not a bubble. Stop calling it that, really? Because, Microsoft's up like almost 12% year to date, but nothing is compared to, of course, NVIDIA, which is still up 27%, actually hit up 32% as of yesterday. Some big, wild reversals. We're not home yet. You can't think about the individual tech stocks. You got to look big picture here of what's going on. We haven't seen high degrees of correlation. Today, we see higher degrees of correlation. Again, we're not home yet because we don't have a quintessential all down day when there's like 98 products in the S&P 100 down. We're getting there though. As I said, if you take a look, okay, huge defensive posture inside of the bond market, okay? But at the same time that I'm talking about, and by the way, it really is a critical juncture to look at the bonds into the close, okay? You don't think that's defensive? Okay, the bonds are exploding up. The S&P's got rocked in the last 2 minutes. I mean, that is evidence unto itself. Because you know what? Thinking like, well, you don't really know if this is a hedge or not. Yeah, you do. You absolutely know, especially when you look at the last couple of moments of trade and everybody goes, panic, right? And these fly and, the S&Ps actually sell off. One of the other areas, though, that it's not all that convincing you just yet, volatility. And as I said, I was calling us volatility-starved animals. As a volatility-starved animal, allow me to tell you distinctly that we're not even at a 15 VIX. We're not even warming up just yet. And that's why, look, if this is a bubble that was just popped, and that's something that we're going to have to look in hindsight. Wow, I remember when Don was talking about on January 31st, the Fed just popped the bubble. You'll be looking at that a month ago. Maybe it was, maybe it wasn't. Clearly, earnings coming out tomorrow, which is February 1st, right? Thursday, you're going to see from the likes of Meta. Meta already got hammered here a little bit, okay? You're going to hear from the likes, of course, of Amazon also. I mean, look, nobody got through today unscathed in big tech land. Apple, though, was already seeing sell-side activity. Speaking of expected move, Apple, okay, already shattered through it. It hasn't even come into earnings yet. So again, we're at a pretty critical juncture in the marketplace. But time out. Again, you got to think bigger picture. It's all in the bigger picture here. We saw defensive posturing in dollar, defensive posturing in bonds. Volatility, in my opinion, ain't home yet. But the VVIX, the volatility of the volatility, did catch a decent bid. But not enough where I'm like, screaming, risk is coming. We're not home just yet. And okay, if you're looking at this and like, it's all over from here, man, it's all over. Okay, it's not. But I'll tell you what, it's a pretty firm start. Okay, From my point of view, the earnings tomorrow night, yes, they are critical. But you got to get through the trading session first. And I'm going to tell you right now, tomorrow, you could open in some rough positioning here. Okay. Really rough positioning. And depending upon what your risk is. Now, I'm sitting with negative delta positions. I don't mind saying I'm sitting with negative delta positions, right? So bearish, movements, we haven't had any in a while. I'll take today. But I'm going to tell you right now, you look at your monitor tab. I don't care whether it's on, Tasty, okay, whether it's on, again, thinkorswim, you better be comfortable with that risk. Doesn't look, okay, like the Fed is going to cut. Doesn't look like the Fed's going to cut. In fact, here's actually the Fed fund futures. You look to the end of the day, all of a sudden, here it is, people. We've been talking about this. Now we're pointing towards, reality. There's a 65% chance now for the March meeting of no cut. Nevertheless, okay, you got to get through tomorrow's trading session. You better be intimately comfortable with your risk. Because as I said, an overnight session, we could see some sell side activity. That could carry, some volatility could carry into tomorrow's trading session. The real question is, are people going to start bailing out of some of the tech stocks even before the earnings? Okay, risk could get completely out of control in the next 24 hours. Literally, this time tomorrow, it's on, people. We see some sell side activity in tomorrow, okay, coming to earnings. Anybody that misses, it doesn't matter whether it's going to be Meta, Amazon, or Apple, okay, they're going to take this marketplace to a early grave. So hands and feet inside of the vehicle. Risk is only just emerging, okay? Sit on your hands a little bit tomorrow. Wait for this to get downright ugly. Ugly would be breaching the expected move. Ugly, okay, is coming down in the S&Ps to like 4,800, okay? Wait for ugly, and then, and only then, might we be able to make a move towards some premium selling. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.